The RMB may face significant depreciation pressure in the next 1 to 2 years, influenced by several factors. These factors can create substantial pressure on the exchange rate of the Chinese yuan. First, the global economic slowdown poses a direct challenge to China's trade surplus. The major economies, particularly the US and the Eurozone, will experience a slowdown in growth, which may reduce global demand for Chinese exports. In the first 11 months of 2024, China's total exports fell by 3.9%, marking the largest decline in the past 5 years. China's main export products, such as technology products, machinery, and apparel, are likely to face demand pressure, which will affect the country's trade surplus. Additionally, the US may reassess and impose new tariffs on Chinese imports, particularly on electronics and home appliances, which account for over 25% of China's exports to the US. Furthermore, Southeast Asian countries, as alternative supply chains such as Vietnam and Malaysia, may further erode China's export market share. Secondly, the changing interest rate differential between China and the US is a crucial factor contributing to RMB depreciation pressure. The US Federal Reserve's monetary policy changes will directly impact the interest rate differential between China and the US, thus affecting capital flows. In December 2024, the Federal Reserve reduced the federal funds rate range to 4.25 to 4.5%, but markets widely predict that the interest rate differential between China and the US may widen again by mid-2025. The US 10-year Treasury yield remained above 4.3% at the end of 2024, while China's 10-year Treasury yield is around 2.8%, with a differential of more than 1.5%. As the interest rate gap widens, there may be increased pressure on capital outflows from China, leading to RMB depreciation. In addition, the People's Bank of China implemented 3 reserve requirement ratio cuts in 2024, releasing more than 2.5 trillion RMB in liquidity. The loan prime rate was also reduced. The 1-year LPR was lowered to 3.45%, and the 5-year LPR dropped to 4.20%. While these measures support domestic economic recovery, they may also lead to a further widening of the interest rate differential, increasing RMB depreciation pressure. The strengthening of the US dollar is another important factor contributing to the RMB's depreciation pressure. In December 2024, the US dollar index reached 107.11, the highest point in nearly 5 months. The strength of the US dollar is mainly driven by strong US economic data and rising risk aversion. Additionally, weak economic data from Europe and Japan has led to the continued weakening of the euro and yen against the US dollar, further boosting the US dollar index. A stronger US dollar typically means capital outflows from emerging markets. In particular, in the case of RMB exchange rate fluctuations, capital may continue to flow out of China, pushing the USD-RMB exchange rate higher. In November 2024, foreign capital outflows from China's stock and bond markets exceeded 80 billion RMB, the highest level in the year, and this trend could continue in the near future. Market expectations also contribute to the depreciation pressure on the RMB exchange rate. According to Goldman Sachs, the USD-RMB exchange rate will stabilize at 7.3 by the end of 2024, with a possible range of 7.4 to 7.5 in 2025. JP Morgan predicts that the RMB-USD exchange rate will fluctuate between 7.4 and 7.6 in 2025. Investment banks generally believe that the slowdown in China's economic growth and the uncertainty of policy stimulus will continue to weaken market confidence in the RMB, leading to downward pressure on its exchange rate.